Hi everyone, this is Shawn. A lot of my referral partners and colleagues and friends, family have asked in last few months or so to do a mortgage updates regarding New York and how mortgage industry is going. And so for those ones and also the one that are watching, I want to just give an overview of how everything is. Today I have a special guest here who has been in this mortgage industry for over 2 decades. Please, Robert, introduce yourself.
All right, so I'm Robert Niyazov. Nice to meet everyone and share what we have been noticing. So please stay tuned until the end because very useful and information that you can actually benefit from is coming.
Robert, you have seen, throughout your mortgage career, how market has gone down, gone up.
Yes.
Just give us, a overview of what's going on in New York market currently, based on your experience and expertise.
Okay, so thank you for the question. I think in the New York area, still the inventory is kind of short. Realtors are saying that, there's a lot of buyers that are exploring the market. So, I wish we had more inventory. That's like the general idea. Most of the buyers are also, a lot of them are also, in addition to being active, a lot of buyers are still on the sidelines. They're waiting, it's a waiting game for maybe the rates to improve. So that's like the general idea. We shall see what's going to happen in the coming months, although there's a lot of optimistic things, in my opinion, are coming, and we'll talk more about this during this. Hopefully we can talk more about this during this episode.
I work with a lot of, first-time home buyer and also investors as well. Let's dive in a little bit on those sort of, clients. For first-time home buyer, we have heard, I'm pretty sure you heard that as well, that, hey, if you're a first-time home buyer, you have to have 20% down payment in order for you to purchase a home. Can you dive into that aspect a little bit? Yeah,
it's a myth. I don't know. I think it came maybe from many, many years ago before we actually were born. That's how the business was done here in America. But it's been a big push over the past 30 to 40 years to encourage the home ownership, especially the first-time home buyers. So for that purpose, there were a lot of programs that were designed with a minimum down payment, 3%, 5%, even for multi-family homes. Until recently, if you wanted to buy, let's say, a 3-family home or 2-family home, the only little down payment, the 3.5%, was available under FHA. But then, it was changed. Now you can even get a conventional multifamily financing with 5% down. So it could be as little as 3% down. Please always ask your mortgage professional, what options are there, and don't just believe what you hear on the street. Many times we deal with clients and they say, well, you know what, I heard. Okay, well, who told you this? Oh, my friend, what does he do? I don't know. He's a pharmacist. Okay, yeah, we respect every profession, but whatever we have in the industry, obviously we should know the best.
Absolutely. To add to what you just said, I want to give a real example. Last year, one of our lender had a promotion, which is a 1% down payment program.
Right.
I was able to help a first-time home buyer to help them to get into that program where they had to put only 1% of their own money, and the 2% we were able to give them as a lender credit. The realtors who I was communicating with regarding this program, they were like, there is no way, it's impossible, so I was like, I gave him the illustrations, documentations, and told him we can get this done. Long story short, we got the file submitted. We got the CTC within 3 weeks. By the way, we do things very fast compared to other brokerage. A lot of my referral partner can say or add things to that as well. So we got this file CTC within 3 weeks, and
Very nice.
the borrower was amazed, happy, satisfied. And top of that, the realtor was like, wow, I doubted you, but that this something can be possible. But we got this file to the finish line. So yeah, there's so many different programs rolls out throughout the year by our lenders, preferred lenders. So it's always good to ask questions, especially the first-time home buyer. They have a lot of questions. So yes, ask your mortgage loan originator all those questions and see what programs are available right now. That you could apply for.
Yeah. And for those who don't know, CTC means clear to close.
Yeah.
This is then the time when you already can schedule the closing, and that's like the best thing people and professionals can hear. The realtors will call the attorneys, the title companies, is this file CTC. That means just clear to close, meaning everything was already approved, the appraisal, the title, the documents that you submit for approval, and now it's just a question of when.
Yeah.
And I applaud Shawn and his team for getting the files to the finish line fast, because that's what really matters these days. Now, why that matters these days? Because when people sell, they want to get their money and move to the next project. And this is like, by doing this, you're actually helping your realtor partners have a good reputation.
Yeah.
Okay.
Absolutely.
So it's important. And yeah, for if you're a first-time home buyer, just in conclusion of this thought, don't be afraid. Ask questions. You don't need to go through with the process if there is something that you don't think you're going to afford. But at least ask. If you don't ask, if you don't play, you're not going to win the lottery. So go ahead and ask the questions. Okay, what my payment is going to be? I'm a first-time home buyer. I only have 5% down. Maybe I'll find money for closing costs. Go ahead and ask. Make your mortgage professional calculate the payment. Then you can discuss it, with whoever you're buying the home, and make a decision. Yeah, it's too early for us. No, or you know what? We are able to do this now. Okay, or we're not able to do this, but maybe we can find a little bit more down payment. Maybe we can borrow from family. Maybe we can get gifts from family. So all of these possibilities could be uncovered if you work with the real professional.
Let's dive into our other sort of clients, like investors who already have own property. Now they're looking to get either a second property or an investment property. I have done many DSCR loans, which is a very excellent program for investors. Could you dive in a little bit more about that program?
So the industry, the mortgage industry, is really benefiting the investors as well, not just the first-time home buyers or upgrade buyers or downgrade buyers. They're also benefiting the those individuals who are buying homes to rent or refinancing existing homes. You do not need any documentation. All you need to do is to prove, or the appraisal will come up with the value of your rental amount. So for example, someone is buying a house for $800,000. Let's just say it's two-family. Each unit can produce $2,500, $5,000 income that can be generated. Even if the property is vacant, they will take the market value of the rent and use it as income to qualify. It's a powerful program. in addition to just kind of replacing the need for the traditional income, it also makes it very easy. So the program is called DSCR. Inquire about this. You will see it, and definitely in the description of this video, you can inquire. You can ask Shawn. You can ask us in comments, and we'll provide more information if necessary. But many times people are actually able to show, let's say, their earned income. They're making X amount of money. They still say, okay, you know what? I choose not to provide the documents because for simplicity, it's a simple program. Now, when this program doesn't work, there are other options. We are not going to go into them now, but definitely, ask. And also with this program, as little as sometimes 15%, it starts at 15%. Not everyone will get it at 15%, but it starts at 15% and up. At 20%, most of you will qualify.
That's amazing. Like I said, there's more to dive into this program. If our viewers has more questions, they could definitely comment on this video, and maybe we'll do another video about just focusing on that program.
Yeah, we would probably should just uncover and more, and then tell about the a little bit detailed information, because we do have a lot of requests for this.
Yeah.
And by the way, no matter where you're buying in the United States, please call us. We can probably help. You don't need to buy just in New York or New Jersey or here in the local area or in Florida. Let's say you want to buy, I don't know, in the state of Colorado, no problem. And I'm not just choosing one. For any possibility, for any scenario, please call, and we'll be happy to assist you.
Now let's move on to another sector, refinancing. We are getting a lot of requests regarding refinance. We had clients that have purchased sometime early 2022, 2023, when interest rate at its peak, I would say 8%,
right,
8.5%, 9%. And now we are seeing a positive downward in the rate.
Correct.
And that's bringing a lot of interest for those home buyers or investors to refinance their property. What's your thoughts into that, and who should do that?
Well, I mean, look, I think it's very logical. If you can save money, why not? If you're paying, let's say, $3,000 for your mortgage at, I don't know, 7.5% rate or 7.25%, and you can do one or two. One is being reduce your payment, reduce your interest rate rather, and then payment by doing the same thing, and or maybe reduce the term. So let's say you took the mortgage 3 years ago, in 2023, in early 2023. Now you have 27 years. Maybe we can go to 15 years and your payment will be about the same or just a little bit higher. Then you reduce your term of your loan by 12 years in this example. So you will finish paying your mortgage 12 years earlier than it is now. Now, if you still want to keep a low payment, you can always refinance for another 30 years or another 27 years. You don't need to extend it. With a lower rate, it might be possible. Now, your mortgage professional will weigh the cost and benefit implication in this case. In other words, they will say, okay, you're saving $350 a month, but let's say your cost is $10,000. Then we will both decide if it's worth it, if the wait to break even is worth it or not. And we always go through that. We'll say, okay, you know what? It'll take you 2 years to start seeing the benefit because obviously you need to account for the closing cost. Also, one important thing: many times you don't need to come out of pocket for the closing cost. It can come from the loan proceeds, which is very important. Sometimes people say, okay, I'll refinance, but I don't have any money for this. It shouldn't be an obstacle.
Right.
We can roll into the closing costs and you'll be saving anyway, or not. Again, you work with your professional to decide what's the best option for you. But definitely inquire. If the rates are better by at least 1%, you should already. The 2% is the old thinking. Why? Because 20 years ago the mortgages were, let's say, 150,000 on average. Now they're much higher. So the sensitivity is there. If 1% savings back then was only $1,000 a year, now it could be 5, 6, 7,000, and 2% could be even more, because the loan amounts and properties are a lot higher now.
Yeah, you're absolutely right, Robert. I want to give, to add to what you just said, I want to give 2 examples, right? I get a lot of calls for refinance, and recently one of my clients, came to me and they want to refinance their property, not just lower their rate, but they also have, or they build up a few other debts, such as credit card debts. Yeah. And many of you guys already know, credit card debts can range from 19% to 25%,
correct,
as high as even more. So sometimes you have to be strategic about it. If your mortgage rate is, let's say, 6%, and your credit card debts, credit card interest payment is 20%, it is like must needed for you to refinance. So then at least you can take the money or equity from your property and pay off that high debt that you have.
Yeah. So what Shawn is saying is perfect example. It's called a debt consolidation. You basically move from paying a high interest rates into the house. You roll into, you can do maybe both, reduce the rate or keep the rate the same on your existing mortgage, but get rid of those high credit cards, high percentage credit cards that are really dragging you down. Now, not only this, what you pay in interest to the credit card company often is not tax deductible, and the interest on the mortgage it is. So, you can benefit by paying the lower taxes at the end. Absolutely. Anyway, you lowered the payment, but now you can even deduct it.
Right.
So, yeah, definitely consider this. If you have equity in the house, you can always cash in that equity by means of a refinance.
Absolutely. And the second example that I want to give is I had another scenario where is a buyer who purchased the home I think early 2022, and now he have built up a substantial amount of equity in the property. So now he's looking to take that some percentage out from his property and buy another property,
right,
using that money.
Great idea.
in form of down payment.
Yeah.
So it comes to what you want and what works for you. There's clients that works, they want to just erase all their debts they have, like credit card debts, personal loans, whatever it is. But there's other sort of clients who want to buy another property because they know if they buy another property, it's another property to their portfolio, and also they could grow wealth from there as well.
Yeah, for sure. Yeah, I do think it's a great idea. I think what happens normally with falling rates, prices do go up. That's just kind of a natural relationship. So don't wait until the rates are really low, because if you want to refinance or rather buy a property, the refinancing is going to be fine. But if you want to buy a property, then you might pay a little more. And going back to just the market, I know you wanted to give some market updates. Mm-hmm. It was really cold in New York and in the old Northeast in the past month or so. It's still cold, but it's much better. So it's already like in the 30s, low 40s. So people are coming out of their homes, of their apartments, to go and look for homes. So it's going to be increased competition. Plus, the purchase season is coming. Purchase season normally means like March to early June. And we can talk about this more in our next
videos.
Yeah,
more about it. So just to sum up this session, I want to say for 2026, it comes down to education's planning and strategy for my first-time home buyer or investor. The biggest mistake is doing nothing because of fear of misinformations. The market rewards people who ask questions,
absolutely
get pre-approval correctly, understand their options, and work with professionals who knows New York mortgage very well. If you are in New York or any other states thinking of buying your first home, considering refinance, planning your next investment property, don't rely on social media guesses. Send me a message, or comment below, or reach out directly. We'll go over your numbers and your options. And my name is Shawn Khan, owner of We Insure USA and mortgage loan officer at R&J Capital. Thank you for watching, and I'll see you at the next one. Robert, you wanna end?
No, it was great. I think it was very informative, and thank you for organizing all of this, Shawn. I just want to say and confirm to what he says. Just ask a question, be out there. Anyone who asks questions, we think good about that person. It's not a bad thing. So good luck in your home search, your investment opportunities, and let us help you.
Yeah.
God bless you all.
Take care.
Thank you.